Bitcoin and other cryptocurrencies have exploded in popularity and value. 2020 was a benchmark year for Bitcoin, seeing the price explode from around $7,000 up to $40,000. And this year, it looks like it could be more of the same, with prices already hitting $50,000. The market cap for all cryptos grew around 300% in 2020, and given the interest shown in altcoins like Doge, that trend might just continue into 2021 as well. But now, there's some news coming out that's threatening to rain on the crypto parade. It turns out crypto mining is a dirty business, responsible for massive carbon emissions, requiring the energy consumption of an entire country to operate. But the question is this true? That's what we're going to try and answer here. And if so, how will the problem evolve over the coming years and far into the future? Make sure to stick around to the end because the answer is not as clear-cut as you might think. News of Bitcoin's energy consumption made headlines just last week, right around the time the price rallied after Elon Musk said that Tesla had bought $1.5 billion worth of Bitcoin. The BBC, who got their data from the Cambridge University, exclaimed that Bitcoin uses more energy than all of Argentina, and if Bitcoin was a country, it would be in the top 30 of energy users worldwide. The Cambridge researchers said Bitcoin consumes 121 terawatt hours of electricity every year, which apparently could power all the electric kettles in the UK for 27 years. According to digiconomist.net, because the energy used is primarily sourced from fossil fuels, it's responsible for a carbon footprint of almost 37 million tons of CO2, and a single transaction releases 300 kilograms of CO2, apparently equivalent to watching 51,000 hours of YouTube. So you might be wondering, why does mining Bitcoin use so much energy? I mean, it uses computers, servers, the internet, even specialized hardware. But is there something else about crypto mining that inherently requires so much energy? That answer is yes. The reason Bitcoin mining is so energy intensive is because of the Bitcoin protocol. I'm not going to get into all the details of it. Frankly, I'm pretty confident I don't understand exactly how it all works, but what you need to know is that all the miners are competing to discover a new block in the blockchain. The winner gets Bitcoin as a reward when successful. This process is intentionally designed to be computationally intensive. Mining equipment randomly generates hash numbers, which are only accepted when by chance someone finds a valid hash that is smaller than the threshold. So what that means is that mining equipment is constantly solving puzzles, and those puzzles are designed to be difficult, and they're designed to get even more difficult as time progresses. And from what I can tell, they're not solving anything important like the Riemann hypothesis or something like that. They're just random puzzles without any significance outside of cryptocurrency. The reason these puzzles are so difficult is to prevent double spending or fraudulently editing the global transaction record. As some researchers pointed out in a journal article, although miners are producing 10 orders of magnitude more random hashes per day than they were 10 years ago, they're using equipment that is 30,000 times more energy efficient. Still, the energy used they estimate to be worth around $1 million a day or around $1 billion over the past year. I'm not sure how they came up with that math, it doesn't really add up to me, but that's exactly what they wrote. However, the researchers conclude that over the last 10 years, even though mining activity has increased by 10 billion times, the ratio between mining cost and total transaction volume has not increased or decreased. However, they don't frame the question in terms of simply energy cost, and their focus is more on the security of the blockchain. There's another research paper that suggests the energy consumption of Bitcoin is actually underestimated. The details of the study are actually locked behind a paywall, but in the abstract, they mention that a lot of the Bitcoin network includes suboptimal devices because of better availability and lower acquisition costs. They also say that common estimation approaches fail to capture market circumstances, like seasonal and geographic variations in electricity prices. Their article is from 2019, so it's unclear how relevant the information is today. I did, however, find a much more recent journal article that looks into the energy consumption of cryptocurrencies beyond Bitcoin. They compared Bitcoin's energy consumption with the top 20 mineable altcoins and found that Bitcoin accounts for 2/3 of the total. So whatever the energy consumption of Bitcoin is, you need to add at least another 50% to account for the other cryptocurrencies. They also compared different estimation methods and claim that the digiconomist most likely overestimates the value using a top-down approach. And when the digiconomist estimated Bitcoin's energy usage at 7.9 gigawatts, the Cambridge Bitcoin Electricity Consumption Index had it at 6.1 gigawatts using a bottom-up approach. And their estimation was at 4.3 gigawatts, also using the bottom-up approach. But the takeaway is, whatever the true value is, at least 50% to take into account the other cryptos. On the other side of the debate table is Bitcoin.com, who recently released an article defending Bitcoin, saying that the detractors are ignoring that Bitcoin energy consumption is far more efficient and greener than the banking system. The first claim is that the banking system requires a larger number of terawatts for their servers, branches, and ATM machines, but unfortunately, that claim isn't backed with sources or specific numbers. They also claim, this time backed by sources, that the majority of miners are using renewable energy. One study from the University of Cambridge found that 76% of miners use renewables as part of their mix, and that a total of 39% of all energy consumption comes from renewable sources. Within China, the epicenter for Bitcoin mining, that number can go as high as 78%. Another article from CoinDesk talks about mining in China using data from the Cambridge Center for Alternative Finance, saying that areas in China with the most Bitcoin mining are characterized as having an oversupply of hydroelectric power. They suggest that energy that would otherwise have been wasted is now being put to use towards Bitcoin mining, similar to how excess energy production in Iceland goes towards smelting bauxite ore for the aluminum industry. It also goes on to say that you can't extrapolate Bitcoin's energy consumption to the equivalent CO2 emissions without first taking into account the source of energy. What all this means for the future isn't clear. So much depends on where the price goes. The head of research at CoinShare, Christopher Bendixson, says that if the price of Bitcoin goes up by a factor of 10, so will the energy consumption. Something to keep in mind though, it's been suggested that the energy footprint of Bitcoin is equal to all the energy wasted from the electrical devices in US homes that are always on but inactive, and that energy consumption from US Christmas lights is also greater than the energy use of some entire countries. That's going to be it for this video. I don't plan on covering Bitcoin much, but if you enjoyed this video, you know what to do. If you'd like to see me cover Bitcoin in the future, please let me know in the comments.